Gold just sent a message straight at the Federal Reserve, and not one anchor on the financial channels said a word about it. The metal did not shout. It never does. But if you know how to listen, what it just did is one of the clearest warnings it has handed us in a long time, and it went completely unreported. So let me give you the warning in plain words right now, before I prove a single thing, because you clicked to know, and I am not going to make you wait for it. Gold is telling you that the floor under the dollar is being questioned again. Not the exchange rate you see on a screen, the floor. The trust that sits quietly underneath every dollar in your retirement account. The assumption you have never once had to think about, that the money will hold its meaning while you are not looking. Gold is whispering that the people who manage that money are not as sure of it as they want you to be. And if you are a retiree with your life savings denominated entirely in that one currency, this warning is aimed at you. Here is why gold gets to send that message at all, and it goes back to a single evening that changed what an American dollar even is. A president went on television, interrupted a Sunday night program, and told the country that the United States would no longer honor its promise to exchange dollars for gold at a fixed price. He called it temporary. He said it would steady the currency and protect the dollar from speculators. That word, temporary, was the whole sell. And that temporary suspension was never once reversed. It is still in force today. Every dollar you own is a descendant of a promise that was closed on a Sunday night and quietly left closed for the rest of your life. Think about what actually happened there, because most people never do. For generations, the dollar had a tether. There was a fixed number of dollars to an ounce, and that anchor kept everyone honest, including the government, because you could always walk up and ask for the metal. The moment that window closed, the tether was cut. From that night forward, a dollar was worth exactly what officials and markets decided it was worth, and nothing underneath it but confidence. Gold did not change. Gold was the same metal it had been for 5,000 years. What changed is that gold was suddenly free to tell the truth about the dollar, out loud, every single day, and it started talking immediately. In the decade that followed, gold went from around $35 an ounce, the old fixed price, to over $800. That is not a rally. That is a verdict. That is the market repricing the dollar after its anchor was removed, and it did it violently, over years, in a move that wiped out anyone who trusted the official story that everything was fine. I have spent a long time in the gold and silver world, and I will tell you what that decade really was. It was gold catching up to a truth the government had been hiding, and the catching up was brutal precisely because it had been suppressed for so long. Now, here is the part the financial channels will never frame this way. That warning gold gave in the 70s was not a one-time event. It was the metal doing the only job it has ever had, which is to measure the distance between what a currency claims to be worth and what it is actually worth. And when I watch gold press to record highs while the people running the currency are openly divided about what to do next, I do not see a commodity going up. I see the same warning light coming on again. I have seen this movie before, and I know how the trailer feels. Because look at where the Federal Reserve actually is right now, stripped of the polite language. This is a Fed that recently chose to hold its policy steady, and the decision was not calm agreement. It was a house divided, with members openly wanting to move in the opposite direction, because they are worried inflation is not beaten. The chair has taken a harder, quieter posture, promising to deliver stable prices and refusing to signal much in advance. And the markets have responded by openly questioning whether they believe him. That is the real picture. Not confidence. Doubt, dressed in a suit. And gold reads doubt the way a barometer reads a coming storm. When the stewards of a currency are arguing among themselves about whether they even have inflation under control, after it has run above their own stated target for years, gold does not need a press release. It simply rises, and it keeps rising even when, by every old rule, it should not. That is the tell almost nobody is talking about. For decades, there was a reliable relationship. When inflation-adjusted interest rates went up, gold went down, because holding metal that pays you nothing costs you more when safe bonds pay you more. That rule was iron. And recently that rule broke. Gold has climbed even while those real yields stayed high. The seesaw stopped working. And when a rule that dependable simply stops functioning, it is not noise. It is a signal that something underneath has changed. What changed is who is buying and why. The largest, most conservative buyers on the planet, the central banks themselves, have been accumulating gold at a pace the world had not seen in generations. For 3 straight years, they bought at extraordinary levels, roughly double the pace of a decade before. That buying has cooled somewhat from its peak, but it remains far above what was normal a decade ago. And here is the detail that should stop you cold. They are buying at record high prices. These are the most price-sensitive institutions in existence, and they are not waiting for a dip. Ask yourself why an institution that could set any price it wanted would choose to keep paying up for gold at the highs. They are not trading. They are protecting. They are moving out of promises and into a thing that is no one else's liability. And you need to understand exactly what drove that shift, because it is the single most important lesson for your own money. And it is the reason for the first thing I want to hand you today. A few years ago, one of the largest nations on Earth had a huge portion of its foreign reserves frozen overnight. Not seized in a war, not stolen by a thief, simply switched off by decree because those reserves were held as someone else's promise, as entries on another country's ledger. And every central bank on the planet watched it happen and drew the same conclusion at the same moment. Reserves you hold as another party's IOU can be turned off. Gold sitting in your own vault cannot. It has no counterparty. There is no one to call and cancel it. That single realization is what accelerated the greatest gold accumulation in modern history. Now sit with what that means for you, because you are holding the same kind of promise they just fled from. The dollars in your retirement account are entries on a ledger. Your bank balance is not money in a drawer. It is a loan you have made to a bank. Your bonds are a promise from a government carrying more debt than at almost any point in its history. Every layer of it depends on the confidence gold is quietly warning about. And if the most sophisticated institutions on Earth decided that promises can be switched off and metal cannot, the honest question is why your entire life savings still sits on the promise side of that line. That is exactly what our free retirement wealth protection guide was built to answer. If you have $100,000 or more in a 401k or an IRA, this guide walks you, in plain language, through how everyday American retirees are moving a portion of that money out of pure paper and into physical gold and silver, held in your own name, inside the very same tax-advantaged retirement account you already have, with no taxes and no penalties to make the move. This is not just for insiders or the wealthy. If you have $100,000 or more in any retirement account, this is for you. If you are watching on your television, just scan the QR code on your screen. If you are on your phone or your computer, go to readfamilyguide.com. From our family to yours, no obligation and nothing to buy. Get it, read it, and at least understand the choice the smart money already made. Now, let me be honest with you the way I would be at my own table, because this is a case, not a promise, and you deserve the caveat before the pitch. I cannot tell you what gold will do next week or next quarter. Nobody can, and anyone who claims to is selling you something. Gold does not go up in a straight line. It has had brutal shakeouts, even in the middle of powerful bull markets. Once, gold fell by nearly a third when the Fed merely hinted it would slow down its bond buying. Nothing fundamental had actually changed, and the metal still dropped hard, and plenty of good people got scared out at the bottom. So I will never tell you gold cannot fall, or that this warning means a straight line higher. What I am telling you is about the direction of the pressure and the identity of who is quietly acting on it. That is a very different thing from a promised price, and I would rather lose your click than lie to you about it. There is another piece of this warning that deserves your attention, because it is not just about the metal rising. It is about what gold has quietly become in the world's reserves. For years after the dollar, the second most held reserve asset among central banks was another major currency, another government's paper. That is no longer true. Gold has overtaken it. The metal that pays no interest, that sits silently in a vault, is now the second most important thing the world's central banks hold, behind only the dollar itself. Read that slowly. The institutions that print money, that can hold anything they wanted, have decided that a bar of gold is more trustworthy than another nation's promise. That is not a headline the financial channels want to dwell on, because it says the quiet part out loud. The people closest to the machinery trust the metal more than they trust each other's currencies. But here is where it gets stranger, and this is the part that almost nobody connects. This is not the first time the authorities tried to hold a line that the market had already stopped believing. Before that famous Sunday night, there was a group of major nations that banded together and spent their own reserves day after day, trying to hold the price of gold at the old official level. They threw real metal at the market to defend a number the world no longer trusted. And it worked, right up until the moment it spectacularly did not, and they abandoned it and let go. The lesson is permanent. When enough doubt builds under a currency, no committee, no central bank, no coalition of governments can hold the old line forever. They can delay the reckoning. They cannot cancel it. And gold is the scoreboard that keeps count while they try. I think about a man I have in mind when I explain this, a retired tool and die machinist, someone who spent 40 years making parts to a thousandth of an inch and never once cut a corner. He did everything right. He saved diligently, he stayed in the market, he trusted that the dollars piling up in his account would mean the same thing at the end that they meant at the beginning. And I have watched men exactly like him do the math late in life on what those savings actually buy now versus what they bought when he started, and go quiet. Not because he was reckless, because he was loyal to a promise that was quietly being diluted the entire time, while the people in charge told him it was temporary or transitory or under control. His loyalty was real. The thing he was loyal to had been changing underneath him. That is what makes this warning so important and so cruel if you miss it. The dilution does not announce itself. There is no headline that says, "The floor moved." The 70s did not begin with a crash. They began with a president saying temporary and everyone going back to their lives. It is only looking back that the machinist can see the exact moment his savings started quietly losing their meaning. And that is precisely why gold matters as a warning system. It is the one instrument that reacts before the official story admits anything is wrong. It is reacting right now. And notice how quiet the dilution stays until it does not. Gold once ran roughly 8 times over in a single decade, and even inside that historic climb, it staged a gut-wrenching drop partway through, nearly cutting in half before it turned and went on to its greatest highs. The people who sold in the middle of that scare thought they were being prudent. They were being shaken off a moving train. That is the pattern with a real warning. It does not travel in a straight, comfortable line that lets everyone board calmly. It lurches, it frightens, it hands the metal from weak hands to patient ones, and it rewards only the people who understood the story well enough to hold through the noise. Knowing the mechanism is what lets you hold. That is why I keep pressing on the why and not just the what. And understand the machine underneath, because this is where fiscal reality meets the metal. A government that owes a great deal of money has a powerful, permanent temptation. High interest rates are painful for a borrower that size, so there is always pressure, spoken or unspoken, to keep money looser than strict inflation fighting would demand, to let the debt be paid back in dollars worth a little less than the ones that were borrowed. History has a name for what happens when the pressure to fund the government overrides the discipline of the central bank. We have watched other nations run that playbook for decades, pinning their savers near zero while the debt got quietly inflated away. Gold understands that temptation better than any economist because gold cannot be printed to pay a bill. That is its entire value and its entire warning. So here is the honest question of your retirement, the one the financial channels are structurally incapable of asking you, because their entire world is built on you staying fully invested in paper. If the tether was cut half a century ago and never restored, if the biggest and most cautious buyers on earth are quietly moving into metal at record prices, if the central bank charged with protecting your dollar is openly divided about whether it even has inflation beaten, then what exactly is the floor under your savings? And who guarantees it? Gold just answered that question. The answer is that the floor is confidence, and confidence is the one thing that can vanish without notice. Let me tell you what the recognition of this actually looks like, because it does not arrive as a dramatic event. The institutions that manage trillions do not wait for a siren. By the time this story is safe enough to lead the evening news, by the time your neighbor and your brother-in-law and the man on the morning program are all telling you to own gold, the quiet accumulation will already be years old, and the easy part will be finished. The people who understand a warning while it is still being ignored are the ones who get to act on their own terms, calmly, before the crowd turns it into a stampede. Right now, this warning is being underreported, dismissed, explained away. That is not a reason to relax. That is the window. Being early feels exactly like being alone, right up until it suddenly feels obvious to everyone at once. Which brings me to the honest thing you can actually do about your own position. And it is not complicated. You do not have to bet your retirement on any of this. Nobody sensible puts everything into one asset, gold included. The idea is not to gamble. The idea is to make sure that if confidence in the dollar is ever seriously tested in your lifetime, you own a slice of something that has answered that exact test for 5,000 years and does not depend on anyone's promise. Own the metal, not a paper claim on it. Size it so that a shakeout can never force you to sell at the worst possible moment. And never, ever let a scary week talk you into handing your protection to the very desks that profit when you panic. And that is where I want to leave you, with the last and most important thing. Because this is not only about you, it is about what you pass on. The wealth you spent a lifetime building is not just a number for your own retirement. It is the head start you hand your children and your grandchildren. A portion of that legacy held in real, physical metal inside your own retirement account is one of the few things you can leave that does not depend on a promise staying unbroken for another 50 years. So this is my final invitation. Get the free Retirement Wealth Protection Guide. And if you have $100,000 or more in a retirement account and you watch this all the way through, mention that when you reach out, because you have earned a free one-on-one educational web conference with our team, with no obligation and nothing to buy. If you are on your television, scan the QR code on your screen right now. If you are on your phone or your computer, go to readfamilyguide.com. There is no fake deadline here, and I will not insult you with one. The only honest urgency is this. The moment to make a calm, reversible decision like this is always the moment when nothing feels urgent, which is exactly the moment we are in. Because half a century ago, a president said temporary, and the machinist believed him. And that word quietly rewrote the value of every dollar that good man ever saved. Gold has been sending the same warning ever since, patiently, to anyone willing to read it. It just sent it again, straight at the Federal Reserve, and almost nobody reported it. Now you are one of the few who heard it. From our family to yours, do not let it be the warning you understood only in hindsight.